Hello, hello, and welcome. Welcome to our South Metro Atlanta First Time Home Buyers class. My name is Lamar Bryant. I want to welcome you guys this evening. Thank you for showing up. Thank you for being on time. We're going to have some fun this evening, y'all. Wanted to kind of do some, what do we call it? Ground rules, housekeeping, if you will. Um, if you are currently not muted, please do us a favor and mute your camera phone and mute your microphone so we don't hear your background noise. And we're gonna get started. Again, my name is Lamar Bryant. I am a agent with Keller Williams Atlantic Classic. Been licensed for going on 12 years now, and I love what I do. I love what I do, and what I love the most is working with first-time home buyers. Oh my goodness, you guys, I love you to death. So what we're going to talk about is some things that I know that I see all the time. People make mistakes, and we're going to talk about the five biggest mistakes that I see people making when they don't do what I tell them to do. All right, we're going to keep it very real. We're going to keep it very, very, blunt and just, be real with each other tonight. So I do want this to be interactive. And I'm going to ask for you guys, to give me some feedback along the way. We're going to save questions, though, for towards the end. I will have a Q&A session kind of towards the end and then maybe some at the very end. So if you have questions, and I know you will, please hold those until that time. I got a lot to share with you, and I'm excited. So we're going to get right into it. Let's make sure that our chat room is working. So we're going to do a quick test right quick. If you are here, I want you to just type your name in real quick to let me know that you're here. Let's see who's in the room. Who's in the room? Who's in the room? Type your name. I see Pat. I see. Okay, and I got some people joining the room. Okay, let's see. Crystal, hey, how you doing? Takia, what's up? What's up? Let's see who just joined the room. Let's see. Now, I'm going to tell you guys right now, I am not the most technically savvy, so bear with me. Give me some grace. Let's see here. Someone just joined the room. Let's see. While everyone gets situated, I'm going to see if I can admit who just joined the room. Here we go. Okay, here we go. All right. All right. Looks like Portia just joined. Welcome, welcome. Good evening again, everybody. We're going to jump right in. Um, Before I dive deep into the meat and potatoes of this here, I want to ask you guys a question. Really do. I'm assuming that, everyone in this room is a first-time home buyer or aspiring first-time home buyer. I want to know what kind of questions do you have, or what's kind of, you know, keeping you up at night? I mean, what are you feeling like kind of concerned right now? Are you feeling stressed out when you think about the buying process? Uh, Tell me go ahead and put it in the chat. What are you feeling right now? What's keeping you up at night when you think about buying your first home? Does it make you feel anxious? Is it like I don't know how to pick out a realtor? I don't know about all the loans and the down payment assistance programs. Go ahead, just send me a quick. I want to see what's on people's minds right now. So I'm gonna pull up the chat room. Let's see. Let's see. All right, what are people saying right now about buying a home? Okay. All right, okay. All right, still got people joining. Down payment and location, Portia. Okay, gotcha. I feel you on that. And let's see what else. What are you guys thinking about? Okay, Pat says she's stressed, understanding the next step after seeing the home you want. Right. I understand how that is. You see the home, you fall in love with it. It's like, now what? Right? I get it. I get it. What else is on your minds, folks? Is it like the down payment assistance programs? Is it just not knowing how to determine whether a home is affordable or not? Talk to me. All right, let's see what we got. What we got in the chat. All right. Down payment, down payment. Okay, Samsung SMS938U is saying that he or she is concerned about the down payment. I hear you. Listen, my goal for this evening, before you get out of here, is to put you at ease. Okay, this process does not have to be very difficult if you have the right guidance. And my goal is to make you feel empowered. In this next 60 minutes, I want you to feel like you can look in the mirror or look at your sweetheart if you have one and be like, you know what? We got this. We good. Woosah, right? We got it. Okay. And that's my goal right there. So I'm going to go ahead and get started. So let's see what the next slide here, if I can make it go. Okay, so just a little bit about me. Again, my name is Lamar Bryant. I'm the leader of the Bryant team, and my wife Ivy and my little one Imogen. They help me with a lot of things. My wife is the contract coordinator, and my baby girl, she helps wherever I need her. Okay. I've been doing this here for quite some time. I got licensed in 2015 and I've been living here in Atlanta for going on 52 years now. I service the Southeast and Southwest Atlanta area. So that's anywhere from like Henry County, Clayton, even Fayette County, and some of South Fulton County as well. So all of that South Atlanta area, that's all me right there. It's got my name all over it. I've been a top producer here at Keller Williams for the last 5 consecutive years, and I have 5 out of 5 stars. You guys can look me up. You can chat GPT me. What is the new one? Claude, whatever. You can look me up. I'm an open book. In fact, some of my reviews are right here. I have two. One by Jermaine Brown. Now, Jermaine Brown is a good friend of mine. He actually had his real estate license, believe it or not, but he was new in the game. And when it came time for him to buy his first home, he didn't really know much. So he relied on me to guide him and show him how to put the one foot in front of the other. And I was proud and happy that I was able to give him peace and show him what he needed to do. Mr. Mendel Evans. Now, him and his wife, they were newlyweds, and they wanted to buy themselves a house, and they didn't have a clue about what to do. So we met through a mutual friend, and I was able to again show them how to put one foot in front of the other, talk to them about down payment assistance, all that good stuff. Got them situated, got them a home that they loved, and we're good friends now too. So that's how it generally works. All right, let's see. So the next thing I want to share with you is my friend Fleeta. Now, this webinar would not be made possible without her help. She helped to sponsor this event, and Fleeta Paul is one of my highly preferred, trusted loan officers. So if it comes to a point where you're ready to get pre-approved or you need some advice on different loan strategies, different products or whatnot, she is definitely a good resource to go to. And I will make her information available for you before the end of this webinar is over with, if you like it. So we're going to move on to the steps to become a homeowner. Now, I get asked a lot, like, what is involved with this whole thing about buying a home? And so it really, again, it's not very complicated. And I'm going to just kind of run through this real quick for you, and we're going to dive in a little bit deeper in the further slides. So the first step, obviously, is to get educated. All right. And you guys are doing that. So kudos to you. You are here in class learning what you need to learn to get started. The second step is to get pre-approved. Now, there's two things. There's a pre-qualification, and then there's a pre-approval. And you've probably heard of both terms, and you might be wondering, well, what's the difference? Well, I'll share with you real quick. So a pre-qualification is basically you talk to a lender, and that could be over the phone, or you might fill out a form online. And then they shoot you a letter that says you can buy a house for $350,000 or $400,000 or $500,000, whatever. That's a pre-qualification because it's based only on the information that you entered on the computer or gave over the phone. They haven't looked at your income. They haven't looked at your W-2s. They haven't looked at your tax statements. They haven't verified anything. So that's a pre-qualification. And I'll be honest with you, it's really not worth the paper it's printed on in this day and time. In order to be competitive, you guys need a pre-approval. A pre-approval letter is not only letting you know how much house you qualify for, but it's also based on your actual documents. So that means you've submitted your W-2s. The lender has looked at your tax returns. They've looked at your bank statements. They know what your credit score is. You feel me? So after they verify your information, then they will issue out what's called a pre-approval letter. With that, you're going to get a lot of knowledge. You're going to find out how much house you can afford, what that monthly payment might look like, what your interest rate might look like, what your closing costs might look like, what your down payment needs to be, all that. Now, wouldn't you say that that would be useful information before you move to the next step, trying to look for a house? Of course. All right. So that's the difference. Pre-qualification, you don't need that. You need a pre-approval. All right. And please do us all a favor. Mute yourself if you have your microphone on. Okay. So let's see. The next step is going to be to actually go house hunting. All right. So ideally you want to be with a realtor though. Okay. Because they're going to be able to look out and help you avoid some of these pitfalls that we're going to talk about tonight. You're going to search and find a house. You know that realtor is going to help you negotiate and present an offer that's compelling to the seller. You're going to go through the inspection process, finalize the financing. Please mute yourself. Please mute yourself. The closing disclosure is something that you have to sign before you go to closing. You sign your docs at the office and then you get your keys and move in. Simple, easy peasy. All right, it doesn't have to be complicated, I promise you. So what I need to share with you tonight though, right, and what I promised you, and the reason that most of you are here, I'm sure, is you came to find out what the 5 biggest mistakes are that first-time home buyers make. All right. And mistake number 1, drum roll, mistake number 1 is ignoring the first-time home buyer incentive program. Man, I cannot count how many times people just you know what it is you don't know what you don't know. And that's just the honest truth about it. So I'm glad you guys are here because I'm going to talk about how you can get some money to help you buy your first home. Now, here's how it works. What is a first-time home buyer program? Well, it could be a lot of things. It could be money given by the loan officer. It could be money given by a special program offered by the county. It could be in the form of a silent second mortgage. We're going to talk about all that stuff. But first-time homebuyer programs are typically specific to the region. So again, depending on where you're thinking about moving or where you're thinking about buying, if it's North Atlanta, South Atlanta, this county, that county, you may qualify for different programs. Okay, it is dependent on your income. A lot of these programs do not offer if you make too much money, right? And some, it doesn't matter how much you make. So it just depends on your situation. And others are forgivable in the form of a second mortgage. That means that you don't have to pay it back, all right? Point blank, period. There are some down payment assistance programs, in fact, that some of which you do have to pay back if you sell the home or whenever you decide to sell or refinance. And then there are others that include down payment assistance where you don't have to pay it back. And lots of times we like to call those grants. Okay, so we're going to talk about that a little bit more, but that's it on a high level. Okay, now the incentives. Okay, these are just some examples. There's a program, in fact, you might want to write this down if you got your pen and paper, but there's a program called Georgia Dream. Some of you may have heard of it. Georgia Dream is a down payment assistance, first-time home buyer program for basically to help you with the closing costs and your down payment. And right now they will give up to $12,500 to assist you with that. And I think it's actually 10,000 right now. It's 10,000, but if you work in a particular industry, such as fire, rescue, medical, teacher, veteran. You know, if you're in the military, you get an additional $2,500 added to that. So up to 12,500 for Georgia Dream. And there's others out there like that. Another form of homebuyer incentives could be 100% financing with no PMI. It stands for private mortgage insurance. Private mortgage insurance. Now, private mortgage insurance is what you typically pay um, on a conventional loan if you have a loan that's if you don't put 20% down, put it like that, you're going to pay that PMI. But then there are programs out here that offer you 100% financing, meaning no down payment, and they don't charge you the PMI. You just got to know about it. Okay. Another one, I see this a lot, especially at the new construction sites. They might offer you anywhere from 10, 15, 25,000, maybe even 30,000 sometimes. I've seen it in flex cash. That means you can use it for down payment, you can use it for closing costs, you can use it to buy down your interest rate. Mm-hmm. Oh, yeah. D.R. Horton, big builder here in Atlanta, they oftentimes run this special where they're offering 3.99% fixed rate on their ready built homes, right? The homes that they've already built that are sitting there, they're trying to get rid of those. So they are incentivizing their buyers to buy those homes first by offering them a super, super low rate. Now, if you listen to the news, there's no such thing as a 3.99 interest rate right now. I think it's closer to like six, a little bit above 6.5, close to the seven, last time I checked. So 3.99, we haven't seen anything like that since what, COVID? So that will make a tremendous difference in the amount you pay a month having that type of interest rate. A 2-1 interest rate buy down is something that a lot of lenders use as a creative measure to save you money on the front end of that loan. So basically what a 2-1 interest rate buy down is for the first year, you're going to pay a discounted interest rate, okay, by so many points. And then the second year, you're going to pay a little bit more, right? The interest rate kind of goes up 1 point. And then the third year, you'll be paying whatever that standard interest rate is at that time. But that gives you an easy foot in the door, right? Let's see here. No mortgage payment until January 2026. All right, well, this slide is a little old, so pardon me for that, but you get the message, right? So sometimes they will offer you no mortgage payment until the following year. And then lastly, another example would be a home buyer's warranty, just to give you a perk, if you will, for buying their home. But all these are different types of first-time home buyer programs. Now, I'll give you an example right here. How does it work? How does the math work? So let's say Miss Anita, she wants to buy a home. Purchase price of this home is $300,000. Okay. The minimum down payment, she's using an FHA loan, and I'll share what that means in a little bit. But an FHA loan, the minimum down payment on an FHA loan is 3.5%. So in this case, we're talking about $10,500. Okay. 3.5% of 300,000 is 10,500. The FHA upfront MI cost of 1.75% of the total loan is 5,250. Okay, that's the fee that the FHA charges for the money, basically. The incentive, however, in this situation is 20,000. Okay, that could be used for the down payment or the closing costs. And so in this case, that covers the down payment 100%, leaving 19,500 for your closing costs. Now you might be asking, well, what are the closing costs? We're going to get into that too, but that's everything else. You get your down payment, and then you got what it costs to actually do the loan. All right. Hope you guys are taking notes. I'm moving a little bit fast because I got a lot to cover, and I want to leave some time for some questions and whatnot at the end. So we're going to move forward. Now, types of mortgages. Let's talk about this for a second. There's 4 big ones. Okay. First, you got conventional. Conventional loans are basically issued by your bank or by the lender. They are not uh, insured by a government entity or anything like that. And lots of times people get it confused where, they think that you have to put down 20% when using a conventional loan. That's not the case. It's not true at all. All right. There are programs out here that you could use conventional 100%. You can pay as little as 3%, 5%, and stuff like that. So don't get it twisted. Conventional loan does not require you to put down 20%. Okay. FHA is the next one. FHA loans are governed by the Federal Housing Administration. And I'm going to dive in a little deeper with the FHA loan because I found that most first-time home buyers benefit more from the FHA type of loan. It really just benefits first-time home buyers a lot more in a lot of cases versus the other ones. But FHA was created in 1934 by the government to help folks that may have had challenged credit or not enough savings to still buy homes. Okay, that's what it was created for. And USDA. Now, I'll tell you a true story. I got a USDA loan when I bought my first home. They are specifically designed for folks that are moving to a rural area or an area that has been determined by the USDA as rural. All right. A lot of people call that country. Okay. So, not super developed like some of these areas in Atlanta. But there's actually a map that USDA, I think it's USDA.gov. Don't quote me on that. I'll find out. But they have a website that shows you what areas are eligible for a USDA loan. Now, what's the big deal about USDA? Well, it's 100% financing for one. That's what I liked about it. No down payment. They do require you to have decent credit. I'm gonna say somewhere around 640, right, to start. And that's the gist of it, So you definitely benefit from not having to make a down payment. VA. All right, so VA is short for Department of Veteran Affairs. For those of you who may have served or have a spouse that has served in the military at any given point in time, may qualify for a VA loan, which are also zero down payment type of loans. Very good product, very good product. They typically have low interest rates, no down payment, and they benefit our heroes, our military, and those who have served. And if there are anyone on this webinar that has served, we do appreciate your service, most definitely. The qualifications for all these different types of loans, it's going to vary depending on the lender that you use. This is why I always recommend that you shop the loan. Don't be afraid to get a pre-approval from more than one loan officer. And the reason why I say that is if you shop your loan within a short period of time, you can have them run your credit 3, 4, 5, 10 times, but it only counts as one impact. As far as the as far as the credit bureaus are concerned, they only count it as one inquiry. All right, please mute yourself. Please mute yourself. Thank you. So if you have your credit run multiple times within a short period of time, I'm going to say anywhere from 15 to 30 days, you're safe. All right, remember that. Write it down. You're safe. You're not going to be dinged for like 10 different inquiries because you're shopping for a mortgage. You don't get penalized for that. Remember that. Okay? It benefits you to shop it because, that's the only way you're going to be able to determine which loan product is better for you. Now, let's dive into this here. So a little bit more, about how first-time homebuyer programs work. Well, Freddie Mac is one of the big government-sponsored entities that make it possible for banks to issue conventional loans. Okay, and basically what they do is they will buy those loans from the bank and turn them into mortgage-backed securities, sell them for more money, and then that's how they're able to replenish the lending institutions with more money, fresh money, so that they can continue to make loans. to the public. And Fannie Mae is very similar. Fannie Mae is another government sponsored entity that does basically the same thing. The difference is Fannie Mae provides debt funding for your big commercial banks, right? You know, your Bank of Americas and your Wells Fargos and Federal, Navy Federal, those big boys like that. Freddie Mac, however, they provide funding for private institutions, your smaller banks, community banks, so on and so forth. And then finally, FHA, which we talked a little bit about, helps you with, you know, acquiring a loan if you have a little bit of challenge credit, you know, or savings. And they are not governed by Freddie Mac or Fannie Mae, by the way. FHA is its own entity. Federal Housing Administration is its own entity. Just good information to know. A little bit more about FHA. They provide mortgage insurance on loans made by FHA approved lenders throughout the USA. All lenders are not FHA approved, just so you know. All lenders are not VA approved. So make sure you shop around. Let's talk about the FHA loan a little bit, folks. All right. So these are some of the benefits, quite frankly, of using an FHA loan. And this is why first-time homebuyers tend to benefit from it. You get a low 3.5% down payment, and you can have a credit score. Actually, this says 580, but you can actually have as low as a 500. Can you believe that? Bet you didn't know that. Do me a favor. Drop a 111 in the chat room if you just learned something like, boom, right? You can have a credit score as low as 500 and using that and get an FHA loan, but you got to at least have 10% to put down. Okay, if your credit is that low, you got to at least have some money. All right, you got to have some money or you have credit. Now, if your credit is anywhere from 580 or better, then your down payment can be 3.5%. Okay, credit score, like I said, as low as 500 with 10% down. Easy refinancing and FHA streamline. Now, I got to qualify that. Depends on the lender. I've been involved with some transactions where the bank can, the lender can screw you up. And I'm not saying that to scare you, but you just got to be very careful about who you're doing business with. And like I said, shop around. Low mortgage rates with FHA, higher DTI ratios accepted. DTI stands for debt to income ratio. So the amount of debt that you have compared to how much income you have, debt to income, those ratios can be higher with FHA versus the other types. And you can choose between 15 years or 13 years fixed rate or an adjustable rate term. You got down payment assistance programs and grants all over the place that allow you to use FHA. And the seller, right? The seller can actually pay up to 6% towards your closing. Bet you didn't know that. Up to 6%. Right? Now, will the seller do that? That's to be, the jury is still out, but that's where having a good agent in your corner to negotiate on your behalf comes into play. All right, moving right along. A little bit about the conventional loan. Okay. I won't spend a whole lot of time on this, but you should know that a conventional loan is a home buyer's loan that's not offered or secured by a government entity. Please mute yourself. Please mute yourself. Thank you. Thank you. It is available through or guaranteed by a private lender, right? So basically by the bank. And we talked about Fannie Mae and Freddie Mac. Those are the two entities that basically oversee the level of concern. Please mute yourself. iPhone, please mute yourself. Season opener. What about the regular season opener? This is Mike Penix Jr. providing FHA versus conventional. FHA versus conventional. Now, if you wanted to compare these, it's not very difficult to understand. You know, your down payment on the FHA is 3.5%, conventional 5%, or 20% to avoid the PMI. Remember that? Minimum credit score can be as low as 500 FHA. With a conventional, the bank's going to be looking for at least about 620. So just know that, at least about a 620 on the credit, on the FICO. Your maximum debt to income ratios differ. 55% with FHA. With conventional, they want you to be a little tighter. on your finances.
More. Log in at
50%
wallet.
is the max.
Mastercard gift
See, if there's a way
card.com.
to
Please enter your
mute,
card number, followed by pound. If your
guys,
card has
please,
a number
please,
on the
please,
front, the card number
let's
may
be
be
respectful of everyone on the call. Mute yourself.
or cannot read your card number present.
All right. All right. Just for the sake of everyone, I'm going to make sure that everyone is muted right now. All right. All right. All right. Moving right along. Okay. All right. So let me see. Hold on, give me a second. All right. Let me get this off. 1 second here. Let me get that off. Okay. All right. What can you or can't you use for your down payment and closing costs? This is a good one. I get asked this a lot. Well, can I pay for my house with cash? It's only on TV. Okay. So you can use your 401k retirement accounts, all right, to help with your down payment closing, gifts from loved ones or relatives, friends, stocks, bonds, cash. Basically, the lending institution has to be able to source those funds. All right. They have to know where you're getting the money from. They're going to ask. All right. So you can't do any janky kind of stuff. All right. You can't pay with a credit card. Okay. You cannot get a mortgage with a loan. You can't get a loan with a loan. All right. And you definitely cannot have undocumented cash coming to the table. It's not going to work. Not going to work. Okay. Now, buyers, make sure I'm not skipping anything. Okay. Buyers eligibility, folks, based on the underwriter review. Now, if there's one thing that you got to understand when it comes to loans and your lenders, your eligibility is going to be based on they're going to look at your ability to pay the loan. In other words, your income, how much money you make. They're going to look at your willingness to repay the loan. Well, Lamar, what do you mean by that? They look at your credit, and the best judge of how willing you are to pay this bill is by looking at how well you've done with paying your other bills. So they're looking at your credit as an indicator of that. They're also going to look at the collateral itself, which is the property, because they want to make sure that before they lend you all this money, that the collateral or the property is something that they find of value. In the event that you default, they want to, they're gonna take possession of that property, and they want it to be something that they can resell, obviously. So it's got to be something of value. And that's basically what your eligibility is based on. Now, I know that was a lot. I get it. All right. And I'm probably flying through this thing. Now it's time for some questions. Okay. So I'm going to take the next 5 minutes. Let's see where we're at on time. Yeah, we're doing good. Next 5 minutes. Anybody has questions? I'll take maybe 2, maybe 3 if we have time, and we got to roll back into it. So unmute yourself if you have a question. Keep yourself muted if you don't have a question. All right. Anybody? Shoot. A little Jeopardy music going there. Come on, y'all. I know y'all got some questions. Unmute yourself and throw them at me. Let's see. Meanwhile, let's see here. Okay, now I do see some questions here in the chat room. So let me go here. Let's see here. All right. What about the interest rate? Portia, you had a question about the interest rate? You can unmute yourself if you like. What is your question about interest rate? When do you tell? Okay, Pat asked, when do you take the funds from the 401k for the down payment? Okay, let me go ahead and attack that one. Pat, you asked, when do you take the funds from the 401k for the down payment? Okay, so real easy. So your lender, whoever that is you're working with, is going to have you access those funds during the, basically during your during your loan process. You're gonna find out how much you have, and basically go ahead and allow you to borrow those funds. And you may even have to contact your employers about how you go about doing that to access those funds. But once you access those funds and they drop into your bank account, then the lender will be able to source those funds and know where they came from, and then you'll be good. But it definitely has to happen during the qualification process, right? During that qualification process. Um, and that's when that's going to happen. Are there other programs for non-first time home buyers for free money? Yes, absolutely. All of these programs that are out here, some of them are not just for first time home buyers. I've encountered a few that are offered by a few banks, institutions that, they're giving money. 100% financing, all that kind of stuff. And you don't necessarily have to be a first time home buyer. You could have another house. This could be your secondary home, so on and so forth. And then you should know, all of you guys should know, um, most of these programs and banks even consider you a first time home buyer if you have not owned a home within the last 3 years. So the threshold is 3 years. After not owning a home or not having a mortgage in your name for 3 years, then you can come back and qualify as a first time home buyer again. Drop a 111 if that was something new you never heard of. Go ahead, drop that in the chat. And if there are no other questions, I'm going to go ahead and move on to the next slide. All right, Crystal, thank you. 111, I see you. I see. Anybody else had ever heard that before? Anybody else? Did y'all know that you can be a first-time home buyer just after being out of the house for 3 years? You sure can. All right, so let's go ahead and jump right back into this.
Hey, hey, Lamar, can you hear me?
Yes, I can now. Who is this?
Okay,
Who's
this
this?
is LaDacia. I got a question. Now, how long do you have to be on your job? Say you're working at a job, but you may switch jobs. How long do you need to work on a job to be able to, get maybe a loan like FHA loan or USDA loan?
Mhm.
Do they have a requirement for that?
Yes.
Or
As a matter of fact, they do. Good question. Great question, Ladesha. Thank you. So typically, your lender is going to require that you show consistent employment for 2 years. Okay. Now that doesn't mean necessarily that you had to have the exact same job, same position for those 2 years. Generally, if you are in the same line of work or in the same
mm-hmm,
industry of work for 2 years, then they will
mm-hmm.
count that as 2 years of consistent employment. You just have to let them know. Just gotta let them know.
Okay. My credit was pretty fair, but now it's in the low fives. Um, I do want to get a home for me and my son,
Mhm.
in the future. I'm looking into, I know these a settlement coming soon. It's kind of personal. I'm not gonna get into that, but how much do I need to, basically just start off maybe like with a 3 bedroom townhome or home or mobile home? Like what would I need to put down, as far as a down payment, for something like that?
Gotcha, gotcha. Yeah, great question. And so I'm going to answer this on a high level, and I'm going to encourage you to schedule a one-on-one with me so that we can take a deeper dive.
Okay.
But
Okay.
it really depends on what type of loan you're going to get. And
Okay.
that more than anything determines what your down payment needs to be, how much money you need
Okay.
to bring to the closing table. Yep, it depends
Okay.
on the type of loan situation and how much you can get for down payment assistance. Mhm.
Right, right, right.
Yep,
Okay.
yep, yep. All right, all right.
Okay. Okay. Thank you.
Thank you. No problem. No problem. You're welcome. Let's see if we can keep this show moving. Let's see here. I can get back into the slideshow. Okay. All right. And I'm going to have, look, we're going to have another opportunity to answer some questions. I want to run right to this
Think I'm
mistake
doing the
number
same
two.
thing.
Oh boy. All right, so do me a favor, y'all. Go ahead and mute yourselves again. We're going to jump into this. Mistake number 2, not getting a pre-approval. Now, I know I mentioned this earlier, but not getting a pre-approval is like, I'm just going to tell you right now, right? If you are wanting to look at homes, browsing is fine, but in my professional opinion, it doesn't really make a whole lot of sense to go looking or house hunting until you have gotten pre-approved, because otherwise you won't know what your affordability is, right? You need to know how much you're going to be paying a month. You need to know what your interest rate's going to be. You also need to know what kind of down payment assistance programs you could qualify for, right? It doesn't make sense to go looking at homes if you don't know how much house you can afford. Am I right or wrong? Yes, you need to know that. So the first step is always going to be to get your pre-approval out of the way. Go ahead and get your W-2s, get your bank statements. If you're a 1099, get that out. Get your tax returns. You know what I'm saying? Get all that stuff together. And that's going to make it a lot easier for you to get pre-approved. All right. Oh, shoot. Here's one of my little helpers. Come on. It's almost time for her to go to bed. Hey, this is my Imogen. Say hello, y'all. Say hello, everybody. All right. Good night. All right. That's my sweetie right there. She helps out quite a bit. All right. So where was I? Talking about this pre-approval. Make sure you get pre-approved, folks. Now, pillars of the mortgage approval process. They can be looking at your credit, your income, and how much you can bring to the table for down payment. All right. Your loan pre-qualification. It's going to help you determine how much you can afford, like I said, based on your credit, your income, and your savings, your assets. It's going to help you determine what house you can qualify for. It will increase your bargaining power when negotiating with a seller. Because let me tell you right now, the seller is going to be looking to see what proof you have that you could afford their house. It's very important, right? They probably won't even look at your offer, to be honest with you, if you don't have a pre-approval attached to it. So for that reason too, you need to get that done first. You're going to be able to also estimate, like I said, your monthly payment, your total investment, and identify which loan product will fulfill your needs. All this comes with the pre-approval. That's why it's so important that you do that first. Okay. Tips for do's and don'ts. Do's and don'ts. I'm not going to go through the entire list. You guys can see my screen. So, point blank period. There's certain things that you just don't make sense to do when you are in the middle of a purchase process or in the middle of a transaction. You don't want to make any large purchases. Don't take out any new credit, please. I can tell you a lot of stories about people. They're almost at the closing table. I'm talking about like within days of the closing, and they go out and buy a whole living room set. Right? Right? But again, you don't know what you don't know. I'm telling you right now, you guys know now. Don't do that. Don't go make any large purchases. Don't go buy a car. Don't take out any large loans or no loans. Don't mess with your credit. Okay. Don't change bank accounts. Don't change jobs. Please don't lose your job. Okay. Don't consolidate any debts onto one or credit cards. None of that. All right. Call your lender if you have questions. Please don't keep secrets. All right. I'm going to say it's not even in this list of dues, but I'm going to also say be very transparent with your loan officer. Let them know what's going on. If you got a bankruptcy, hey, it is what it is. Life be life, and as we like to say now. If you got a bankruptcy, let them know, because it's going to come up. It's going to come up, right? If you got a repossession or something, God forbid, on your car, it's going to come up. It's going to come up on the credit report. So again, just be very transparent with your loan officer. Don't hold back, right? Let them know what's going on so that they can be fully equipped and fully aware of everything that's going on with you, so they can be able to help you out. Help them help you. You hear me? All right, so let's move on to the next slide, if you will. Okay, underwritten pre-approvals versus rate. I don't think anybody does rate holds anymore because it's kind of useless. Just to lock the rate in, but you don't have a pre-approval. You can't do anything with a rate hold, right? But with your pre-approval, that shows proof to the seller that you have adequate income, you have adequate credit, and you're also going to know where your down payment is coming from. It's more reliable, okay? And it tells you what your maximum qualifying amount is. Now, let me tell you something. Just because your pre-approval says that you can qualify for a $400,000 house, that doesn't mean that you have to go out and shop for a $400,000 house. It's all about what you're comfortable with spending per month. Okay. It's good to know that you can buy a $400,000 house, but it's all about what is a comfortable monthly payment, right? A $400,000 house might, be a little too rich when you look at that number, a little too rich for your pocket. So let's be mindful of that as well. Pre-approval versus pre-qualification. I don't have to spend a whole lot of time on that because we already talked about it. Remember, pre-qualification is only based on the information that you give to a loan officer or to the website via the phone or online, and is not based on any verification of anything. Your pre-approval means that it's solid. It's solid. Okay. And if you're working with a good lender, they're going to make sure that you can hold them to that pre-approval. Okay. All right. We're moving right along here. Mistake number 3. Please get this. Using your bank. Now, I had a client years ago who was, he banked with Bank of America. Good bank, big bank. I use Bank of America. But would I get a loan from him? No. No. Using your bank is not necessarily the best way to go. Just because you have a relationship with them and you've been with them a long time, you have a checking account with them, that doesn't matter. Big banks have all kinds of fees. I mean, stupid fees that, your smaller community banks don't have. They don't charge you, right? And so these commercial banks, I'm going to tell you something else. Yeah, it's about the money, but the other thing is they're so big, and this is just from this is my personal experience. The commercial banks are big, and to them, you're just a number. You're just a number. And I've had too many experiences with buyers that are trusting in their bank to offer them a mortgage. They don't seem to have any kind of sense of urgency. A mortgage has a timeline. Okay, purchase transaction has a timeline. They don't seem like they have any kind of sense of urgency or any kind of respect for the timeline. You're just a number. So my recommendation to you is not to use your bank necessarily. All right. People ask me, well, can I use my credit union? Depends. Depends. There are some that are good, and that respect the timeline and that are very helpful. And then there are others that work just like the big banks. And I'm not going to throw anybody under the bus, but like I said, I've been doing this for a long time, and I'm not a big fan of using credit unions myself or big banks. I think you stand better to use a small private lender or a community bank or a mortgage broker. A community mortgage broker or lender, because they look, they work on commission just like we do, just like agents, right? Those folks at the red, white, and blue bank, they're employees. They can't give a crap whether you closed or not. Okay, they're going to get paid anyway. They're employees. So, when you're working with the smaller banks, they rely on your business to stay alive. So it's a big deal for you to close. They don't get paid until you close, just like I don't get paid until you close. Hope that makes sense. So I think it's best, if you're shopping for a loan, just stay away from the big banks and work with someone that's going to treat you like a person, not like a number. All right. Next slide. Mistake number 4, buying directly from the builder. Now, I'm going to qualify this here because it's not necessarily bad to buy directly from the builder. And when I'm saying from the builder, I'm like, DRB, DR Horton, Meritage Homes, your new construction builders, those communities is what we're talking about here. It's not necessarily a bad thing. For the most part, the agents are trained to be very respectful and trained to be, work, fairly and, with ethics and everything like that. However, you got to be mindful that the sales agent at that community works for the builder. They negotiate for the builder. They're in business to protect the builder's interests, not yours. Now they're supposed to be nice and provide excellent, A+ customer service and all that good stuff, and they do that most of the time. They do that. But when it comes down to the nuts and bolts of that transaction and what's in your favor, just remember, it's always best for you to have your own realtor in your corner. Okay? Have your own realtor. And if you work with anybody, make sure you work with a realtor, not just a real estate agent. There's a difference. Realtors, okay, are held by a higher ethical standard and they have to go through a lot more rigorous training. Okay. So if you work with anybody, make sure you work with your own realtor. It doesn't cost you anything because 9 times out of 10, the builder is going to pay that agent the commission. So there's nothing out of your pocket. 9 times out of 10 is nothing out of pocket. Most of the times the builder is going to pay, your agent's commission. So it just makes sense. Now, it says here on this slide that closing cost assistance can be bait for a higher interest rate, which could cost you more in the long run. I haven't seen that happen much, but yeah, it's a possibility. So you just make sure that you have your agent, right? Look at the fine print, examine the contract, and make sure that you're not being baited, right? Having somebody that knows how to examine a contract in your corner is always going to be to your benefit. All right. Let's see. Realtor works for you, and the sales agent works for the builder. I said that. And you guys see, you see where I'm coming from. It always benefits you to have an advocate in your corner. Don't just rely on the sales agent at the new construction community because they're nice. All right. It's business. Mistake number 5. All right. Hope you guys are taking some notes. Hit me with a 1111 if y'all are taking notes. Right. I'll take no offense to it if you're not. But hit me with a 111. Let me see who's really engaged here tonight. Let's see. 111. Where y'all at? Where y'all at? Okay. Crystal is on it. Pat is on it. Who else? Nobody else? Okay. Deidre is on it. All right. Thank you. All right. So let's talk about this 5th mistake, folks. Skipping the home inspection.
Hi. I'm sorry to interrupt. Can you hear me?
Yeah, who is this? Natasha? Hello? I did hear you.
Yes, I'm sorry to interrupt. I'm driving, so can you hear me?
I can.
Can you hear me?
I can. Go ahead. You have a question real quick?
Okay. I'm driving, so okay. I'm driving, so I didn't want you to not know that I'm not hearing you.
Oh, no. Okay. No, that's not a problem. Not a problem. I count your 111 in the chat. I got you.
Yeah.
That's
Okay.
all right. I appreciate that. All right, so we're gonna jump right into this home inspection type of this business here about the home inspection. Let me tell y'all something. During COVID, it was tough for buyers. It was so competitive. It was crazy because there were not a lot of homes available. To be honest with you, there were not a lot of inventory available, and people were fighting over the same home. And they so much to the extent where folks were waiving their home inspection just to make their offer more attractive to the seller. It was crazy. I never recommend you skip the inspection. What you're going to end up doing, skipping the inspection, is making a big mistake. I mean, to the tune of 20,000 or more. All right. You don't do an inspection, your agent is not a home inspector. And you, 9 times out of 10, you're not trained to see the things that a home inspector is going to be able to point out. The reason why you pay that $400 or $500 for that certified home inspector to go in and look at that house from top to bottom, inside and out, is so that you know what you're buying before you are knee deep into the transaction. Okay? Because after a certain point in time in that transaction, if you want to back out and your inspection period has elapsed, right? Doesn't matter if you got an inspection or not, you're going to lose that earnest money. And I'm talking about, earnest money is we're talking about 2, 3, 4, 5 grand, depending on the price of the house. So protect yourself, make sure you get that home inspection, because that's going to let you know if there are any problems. Hope there aren't, but if there are any issues that give you heartburn, it's best that you know about them up front so that you can make an informed decision as to whether or not you want to move forward with this house, or negotiate those repairs with the seller, or ask for some additional concessions in lieu of repairs, right? Being informed is what's going to protect you. And if y'all can't come to an agreement, you and the seller, then you can back out within your inspection period and still be entitled to your earnest money refund. All right? Very important. But don't skip the home inspection, because, yeah, I can tell you some stories. I've never allowed someone to, waive their home inspection. And if they did, I would have had them sign something that says, I'm not liable if you, buy a dud. But no, I haven't had that situation where someone just refused to get a home inspection, because it just makes sense. And so you just need to know what you're buying. But skipping the home inspection, man, you wind up with something that has some deal breakers that you didn't know about. You're going to lose all your negotiating power, because if there's things that need to be fixed, you can't come up at the last minute and ask for them to fix it. Don't work like that. You're going to risk inheriting non-structural safety issues such as mold, radon, carbon monoxide. How are you going to know that all that's going on if you don't have an inspection? You miss having a forecast of future repair costs, and you're just basically oblivious to the situations where they may have violated codes, may have done additions to the house without permits. You gotta get the inspection, okay? All right, then this last one right here is kind of a bonus. Skipping a condo document review. This is only pertaining to if you're buying a condo. If you're buying a condo, the condo document is important. It is something that the bank requires, but I'll tell you a story. I was on the listing side of this situation, and the buyer, waited to the last minute to have their lender ask for the condo inspection. The condo questionnaire. Well, turns out the HOA, the condominium HOA, was behind on their bills, and they weren't fixing stuff the way they're supposed to. And this lady, long story short, lost her earnest money because they didn't get the condo questionnaire done on the front end. They waited to the back end where all her contingencies had expired. So she actually lost more than $10,000. It's serious. So that's basically the 5 mistakes. Now let's do a recap real quick for those that came in kind of late, right? I want to make sure that you get this, because this is very, very, very important. Don't panic on me because you came in late. All right. I'll give you some grace on that. Here we go. Here are the 5 mistakes. Number 1, don't ignore the first-time home buyer incentive programs that are out here. It's lots of times free money that you can get to help you with your journey of buying a home. Getting a pre-approval before home showings is very important. Don't skip that step. You got to know what you can afford before you go out looking for a house. You got to know what your monthly payment's going to be, right? So you don't have sticker shock. Okay, don't go looking for a $500,000 house if you can only afford a $300,000 house. Come on now, right? Let's be real. Number 3, don't just go to your bank for a mortgage just because you have a relationship with them. Use a broker with access to multiple lenders. Shop that loan, right? Make sure you're getting the best program that suits your needs. Number 4, don't skip the home inspection. Never, 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 never. Don't do that. Okay, you're gonna hurt if you do that. Number 5, don't buy directly from a builder. I'm gonna qualify that and say just make sure that you have your own agent working on your behalf to analyze the documents. Don't just trust the sales agent at that new construction community, because again, they work for the builder. They don't work for you. And then lastly, don't skip your condo document review if you are buying a condo. All right. Now, I got a question for y'all, okay? Now, this is where you guys get to chime in and tell me how I did. Let me know in the chat. Go to the chat room real quick. Let me know, has your time on this free webinar been well spent? Hit me with a 111 if you feel that way. Let's see what we got. All right. Can these slides be emailed after the meeting? I don't have access to email the slides, but I tell you what, who is that? Jerry, I tell you what, in just a little bit, I'm going to give you an opportunity to meet with me one-on-one. All right. And I'm going to put that link in the chat room so that we can take a deep dive and I can answer any questions that you have. You won't even need these slides. Trust me. All right. Let's see. What else? 111. Pat. Thank you, Pat. Samsung. Deidre. Crystal. Yes. All right. Very. Man, y'all making me feel, look, I'm feeling all warm and fuzzy in the inside, right? So I guess I did a pretty decent job. Let me ask y'all another question real quick. Okay. Let's see here. Do you feel more confident now in being able to purchase a home? Hit me with a thumbs up if you feel that way. Do you feel like, you learned something tonight? Like, you can stick your chest out a little bit more. All right. If you're feeling that way, hit me with a thumbs up or a 111. Appreciate y'all so much. Okay. Would it be fair to say that using these tips that I gave you will give you a significant advantage when you go to buy your home? Would it? I hope so. All right. Hit me with a thumbs up or a 111 if y'all feel this way. All right. I'm loving the energy. Thank you. Let's see. Let me click over here and see who is responding. All right, Deidre, very informative. Thank you very much. All right. Crystal says you should. All right. Very nice presentation from Pat. Thank you. Very informative. 111. Love y'all. Jerry, thanks for the thumbs up. All right. I'm loving it. Okay, I got another question. So, I don't know, if about the home buying process, a whole lot, or coming to the webinar today. I'm hoping that it was very informative. I would even say it'd be a safe bet that, we covered some stuff today that was new, exciting that you didn't know, right? If you feel that way, hit me with a 111, hit me with a thumbs up, right? I'm loving it. Next, I want to ask you, do you want to spend more time with me? If this is true, I'm going to offer you a chance to do that for a limited time. I'm actually doing some one-on-one first-time homebuyer consultations, right? For a short period of time. Lots of times I'll have a teammate do these sort of things, but for the next week or so, I want to meet with you personally, get your questions answered, make sure that you feel comfortable. And let me tell you something. This is not, where you got to feel obligated or, you're not signing with me, right? You're not signing anything. You're not hiring me, okay? This is going to be a very candid, relaxed conversation, right? I want to know what it is you're looking for. I want to know, what are you still? I want to know. Tell me what it looks like. What is a home run for you when you buy your first home?